Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Thursday, June 13th, 2024. Let's take a look at the chart. Start with the big picture. Long-term bear market still exists below 216.09. That is a one-year structure. Upward retracements into this zone should be considered sell opportunities, whether that's unloading a long position or going short, if your time horizon is, say, 3 to 5 months and out. Because we can rotate from here back to the channel support that will, over the next few months, coincide anyway with the 101.81 January 23 low. So holding below 216.09, we can, within the year, over the next 6 months, fall to 101.81. I don't know if we'll test 216.89 or not. That would come into play with a settlement above the 186.56 area, which we may actually test today. I'll get to that in a moment. 186.56, meaningful channel resistance. We have both a descending channel top that goes back some 6-7 months or so, and a horizontal channel structure that goes back about a month. They all are in the same vicinity. 186.56, able to contain buying possibly through July. Because of the longer term bear market, we can fail here and fall away as we move into July, August. But if we close today above 186.56, we have a 3 to 5 week buy signal or sooner to 215.07, which is the same formation on the daily chart that we find in the weekly chart at 216.09. That area able to contain buying really through the third quarter, possibly into later year. And if we were over the coming weeks to close above 216.09, it's another story altogether. Good low for the year, meaningful gains than anticipated as we move into Q3, Q4, the following 3 to 5 months, then in reach of the 320s, 330s. But we're not there yet. Let's take a look at the day itself. I'm going to jump to this chart. Now, if you recall, I don't have it here in the newsletter, but there is this sort of mid-band coming down that is parallel with this line. And that's actually at 177.01 today. We pushed, through that yesterday, backed away to close just below it, and I have rounded up, if you will, to this channel top at 179.07 as our daily pivot point. 179.07 may well contain daily buying pressures, and quite possibly through the rest of the week. From 179.07, we can fall to 166.57 over the next 1 to 2 days, potentially to 154.16 over the next week or two. I don't see 154.16 as an objective unless either A, we close today below 166.57, and that should then be within 3 to 5 days or sooner, or B, if we test this 186.56 formation today, this longer term resistance I'd mentioned, able to contain buying possibly through July, and from here we could fall back to some variation of 154.16. It would be a different structure, but it would be in the 150s and in the mid 150s within a week or so. So 186.56 is once again anticipated today if we push or open above 179.07. We're bound to get some hesitation at 183.14, but if we push, especially if we open today above 179.07, you should anticipate 186.56 intraday, where we can top out for the day, for the rest of the week, talking to 3 to 5 day swing traders, and really possibly through July. Now I'm talking to 3 to 5 week swing traders because we could fall away from here longer term. Once again, if we were to close today above 186.56, we have a good June low. The next 3 to 5 weeks then likely to push into what is now in the mid 210s and dropping daily, where we could top out through the third quarter, possibly the balance of the year. So no good reason to be short Tesla if we close today above 186.56 and your time horizon is, say, 3 to 5 weeks out, because I do think 215.07 is likely over that time frame. Until then, this is the area to sell, and we just might see it today with a push through 179.07. Given the recent strength in the technologies and the triple Q and so forth, I kind of wrestled with whether I should call 179.07 a mere intraday pivot point, wanting to discourage aggressive selling here. But it is what it is. It is a valid channel top. And that mid band that I've been drawing now for the last week or so was also pushed through yet not settled above. So holding below 179.07 once again, if you're short, and that was the possible trade you could make. I'd mentioned in previous videos that this is an area that you might not only sell on a day trade basis, but a 2 to 3, 3 to 5 day swing trade basis. And so if you went home short after testing that upper 170s resistance, you can hold out for 166.57. On the way down today, I have 170.66 as a solid intraday support level. That is nothing more than the low settlement price from Tuesday. It is the lowest settlement price we've had in about a month. It can contain intraday weakness. It is a solid level for day traders. And if we break 170.66, 166.57 is likely where a daily low can be made. And once tested, and now I'm talking again to not only day traders, but 3 to 5 day swing traders who may then anticipate upward rotation back up to the 179.07 channel top. And that is kind of the two-sided dynamic we find ourselves in over the next few days. If we push or open above 179.07, 186.56 is likely today where we could top out through July and fall away. If we test 186.56, you may consider reaching for 155 or 150 strike out of the money puts that don't expire for at least a month. This is probably a 2 to 3 week downside rotation. You could also perhaps consider reaching for 100 strike out of the money puts that don't expire for at least, I would go 6 months out on that 2 to 3 month play. Once again, testing this 186.56 area does allow channel support that I now peg at 108.09 and dropping. Let me finish with the downside here. That, if we were to close below 154.16, it's not going to happen today, but if by the end of next week we do, and given the fact that the bear trend remains firmly intact below a number of levels, primarily, not just 186.56, but primarily this 215.07 area. So once again, the trend is your friend here. What I'm really trying to articulate is if we were over the next week or two to close below 154.16, that is a go with sell signal into the low 100s. We have a well-defined descending channel bottom at 108.09 and dropping, which is why I've been mentioning that if we close below the 154.16 level, you could consider that 101.89 January 23 low a realistic 1 to 2 month target. Let's see, 1 to 2 months? Yeah, 1 to 2 months. I think the timing on that would be correct, but I'm not expecting it unless either A, we close below 154.16, and you could consider it attainable following a test of 186.56. We could fall all the way back to channel support within a couple of months of testing that 186.56 level. Once again, I'm going to say it one more time. If we close today above 186.56, it is a go long strategy as we move into July. I would then anticipate 215.07 within 3 to 5 weeks where profits can be taken and a short set as we move through the third quarter. I think that pretty much rounds it out. I am going to leave it at that for Thursday's Tesla report. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of those that 5-day free trial. We do 2 stock picks a week, daily triple Q, daily SPY, so forth and so on. I will be back tomorrow with Friday's Tesla, and you have a great day.